Welcome in. I am the crypto bull god, and in today's video I'm here to share with you why I believe most likely prices on Bitcoin will not be falling below 22,500. If you appreciate the content, make sure to give a thumbs up, drop a comment, click the bell icon for notifications, and subscribe to the channel. You can find me on the Twitterverse, you can find me on YouTube, Instagram, and TradingView. One word, it's right here. Whoop! Crypto bull god. Just a quick disclosure that none of what I'm sharing is financial advice. We're all big boys and big girls. I'm here to just help educate you so you can make your own personal financial decisions. With that being said, let's get into it. All right, before we get into the charts, I want to encourage you to go to my YouTube channel and scroll back to the Bitcoin Bull is Back. This is a video that I published 7 months ago, as you can see here. It's only 5 minutes in length, okay? But in this chart, in this video, the purpose of it was to show you 3 charts, and when we could check off that we received bullish confirmation on all 3 charts, we knew with a high degree of conviction that truly a bullish phase and bullish impulse was going to be occurring in all of cryptocurrency, okay? We are awaiting, and we'll get into this at the end of the video, but we are awaiting confirmation on the very last chart, and I'll hit on that towards the end of this video. It's something I'm going to revisit once we receive bullish confirmation. So let's take a look at our first chart here. This is the Bitcoin 12-hour chart. And this is actually the first chart that's indicated in that video. If you've been here for a while, you know the historical significance. Not only did we get a golden cross back here with the 50 purple crossing above the 200 pink, but it's very, very important to note that both the pink, which is very important, and the purple, they're both curling up. Okay, and price action, once we have a true golden cross and we get that bullish momentum picking up where both moving averages are starting to pick up, typically what price likes to do, we know that crypto is very volatile. Even if we see a correction, we tend to hug this 200 simple moving average right now, which is at around 21,500. We tend to hug it. We might wick below it. We might stay here temporarily, but we tend to stay above it and continue to move up. So this is very bullish price action on the 12-hour chart. Now, because this bullish momentum has sustained itself on the lower time frame, as you know if you've been subscribed here for a while, the bullish momentum that has sustained itself on this lower time frame, it has bled over into a higher time frame. This is a critical chart that I've spoken to. We've received bullish confirmation on this chart, and let me explain to you why we know that that is. Back here in 2015, 14 really and 15, you can see that the red circle is denoting a huge area of price action that is below this green line. What is the green line, that you may ask? It is the 125 simple moving average, okay? We had about 340 days, I believe, under this 125 simple moving average. Once we had a green body close above the 125 simple moving average, in this case in 2015, we did a 94x. Same sort of thing back in 2018 and 19, we saw sustained price action under the green line. Once we got above it with a candle body close, not a price wick, we did a 2.5x. Back in 2020 with the beer virus, we were under here temporarily. This was a V-shaped recovery, very odd times. And once we received bullish confirmation with a candle body close, we hugged the line. We didn't get candle body closes below. We hugged the line, and then we did an 8.1x, okay? Again, this was actually an extended period of time that was longer than back here in 2014 and 15 by a couple weeks. But we've just gotten bullish confirmation with a candle body close above the 125 simple moving average, this green line. The prior 3 times this has occurred in history, we have gone on massive runs. The other important thing to point out, we'll jump back to this chart in a second, but the other important thing to point out is once we've gotten above the green line, could we expect to stay above the green line, or do we enter territories below the green line again? Well, all we can do is use past history as a precedent for what we may be able to anticipate in the future, right? There are no guarantees, it's just probabilities. Once we crossed above with a candle body, We went below the green line 0%, so we stayed above it. Back in 2018, once we got above it, we went below it by 0%. We stayed above it. Here in 2020, you can see that we got a wick below it by 6.5%. So we stayed above the green line, but we actually got a little bit of volatility where we went below it temporarily by 6.5%. If we come to the current times, okay, and we believe that today could be similar to the past, okay, the green line right now is trending down, but it's beginning to trend down at a slower rate. And based on price action, the candle bodies being above this moving average, I'm fully anticipating this moving average to begin to flatten out right along this area and begin to cross up right around 24,100. So if we use past history as a precedent to proxy today, and we expected somewhere around a 6.5% level of volatility below this line, interestingly enough, that puts us at 22,500, okay? The reason I say it's interesting is because we have price confluence, price confluence, price confluence, price confluence, price confluence, price confluence, price confluence. There's a lot of price confluence at 22,500. It would not surprise me one bit to see prices wick somewhere around 22,500. Now, again, one of my friends on Twitter, Nick, you may know him as Ncash Official. If you don't know Ncash Official, give him a follow on Twitter. He has great content on both YouTube and on Twitter. He pointed out that there is a CME gap somewhere in the $20,000 area. Now, my reply to that, and I trust the figures that he was presenting. I didn't fact check it. He's an extremely smart guy, so I didn't fact check it. I'm assuming that's correct. And the thing I pointed out to him is CME gaps don't have to fill. They're there, but they don't have to fill. If you go back in history, a lot of those CME gaps have filled. Some of them haven't, okay? His point was just to point it out as a point of something to keep in mind. And I totally agree with him. You should keep it in mind because all we're doing in the market is we're attempting to use this data to give us probabilities of what to expect, right? Could we get some sort of volatility wick that closes the CME gap and comes down to the $20,000, $21,000 area? Absolutely. But I wouldn't expect price action to stay down here. I would expect it to be just that, a volatility wick, an opportunity to buy prices much lower than where I and a few on Twitter are expecting. But again, my main hypothesis is I don't expect prices to go below 22,500. And again, if we fall below the 125 simple moving average on the 3-day, I expect it to be a volatility wick, okay? I don't expect prices to come down here and stay down here for long. I expect it to be a wick and getting above the green line. Why do I say that? Again, all I'm doing is using past history. Anytime we have been under here for sustained periods of time, once we've gotten above, back above with a candle body close, we've either never touched the green line and ridden it prices much higher, or we've sort of rode this line for a little bit until we went much higher. Now, the last thing I want to point out here quick before we get off this chart is what this 5.3x signifies, just as a reminder. Again, the prior two times, because I think a 94x is unreasonable, the prior two times we got above the green line, okay, we did a 2.5x and 8.1x. I simply took an average. And that's measuring from the green moving average, the 125, all the way up to where we topped out, okay? So somewhere between a 2.5 and an 8.1, averaging it out puts us at about 5.3. Where we crossed, okay, if we go back here, we crossed at this level right here. So from approximately 24,570, a 5.3x would put us up at 130,000. That's not an unreasonable estimate. So that's where that line comes from. The other thing I wanted to point out, and this gets at what I was getting to at the beginning of the video. By the way, if you appreciate the content, make sure to give a thumbs up. Drop me a comment. I appreciate the engagement. If you agree or disagree with my logic here, give me a shout out and let me know your thoughts. I love healthy debate. This is the 10-day chart. This is the last chart we're waiting for bullish confirmation, just trying to keep things stupid simple on that 3-chart checking off view for bullish confirmation. This candlestick will close actually on the last day of March, okay? Ideally, where we want this 10-day candlestick to close is at or above the 125 simple moving average, which would be at around 27,840. And that's what you want to look for, but we'll revisit that in a different video. The last thing I want to point out to you is just a point of reasonableness, just something to kind of zoom out and keep things in perspective, okay? This, I've spoken to many times, was a major area of price confluence. Once we were below it, because we had two major moving averages on the weekly and two areas of price confluence at around 25,000 and 26,500. Now that we've gotten above it, ultimately, I would anticipate these levels to hold as support. Again, next week, could we see a volatility wick that comes all the way down here and then comes ultimately back up above 25 to 26,000? Yes. Do I anticipate prices coming down here, staying down here, and going lower? No. Is it a possibility? Absolutely. Do I anticipate it? No. There's too many other charts I'm looking at that are signaling too much bullish momentum that we'll get into in later videos. But these are the things that I want you to keep in mind. Again, I'm hoping that this made sense in terms of why this area of price confluence around 22,500, given price confluence, as well as what it means when we get candle body closes on the 3-day above the 125 simple moving average. All we can do as logical technicians in this space is use historical data to make inferences on what we can expect today and moving forward. If you found this content helpful, make sure to give a thumbs up, drop a comment, subscribe to the channel, and click the bell icon for notifications. Until next time, spread awareness and carry the education forward.
So what you gonna do, $5 on Crypto Bull and his crypto maniacs and the entire cryptocurrency market run wild on